Today we are covering the itemized deduction for medical and dental expenses, focusing specifically on the 7.5% of adjusted gross income threshold. The exam will absolutely test your understanding of this floor. It's not enough to know what a qualified medical expense is. You must know how to apply the limitation. The rule states that a taxpayer can only deduct the total amount of qualified medical expenses that exceeds 7.5% of their AGI. Let's use an example. Suppose a taxpayer has an AGI of $100,000 and $12,000 in qualified medical expenses. First, you calculate the floor, which is 7.5% of the $100,000 AGI, resulting in $7,500. The taxpayer can only deduct the amount exceeding this floor. So, you take their total medical expenses of $12,000 and subtract the $7,500 floor, leaving a deductible amount of $4,500. A common exam trap is a question that lists the total expenses and asks for the deduction, tempting you to choose the total amount. You must perform the AGI calculation first. Qualified expenses include a wide range of payments for medical care. This covers fees paid to doctors, dentists, surgeons, and other medical practitioners, as well as costs for hospital services, prescription drugs, and insulin. A heavily tested area is insurance premiums. Premiums for medical, dental, and qualified long-term care insurance are deductible, but only if they are paid with after-tax dollars. If your employer pays your premiums, or if you pay them through a pre-tax payroll deduction, you cannot deduct them. For qualified long-term care insurance premiums, the deduction is subject to annual, age-based limits, which the exam may provide in a table. Another specific item is transportation. The cost of transportation, primarily for and essential to medical care, is deductible. This includes the actual cost of fares, or, if you use your car, you can deduct a standard medical mileage rate. For 2025, that rate is 21 cents per mile, plus any tolls and parking fees. The exam often presents scenarios involving capital expenditures for medical purposes. A capital expenditure is a significant purchase that improves a property. If its main purpose is medical care, it can be a deductible medical expense. However, the deductible amount is limited to the extent that the cost of the improvement exceeds the increase in the value of the property. For instance, a taxpayer with a heart condition is advised by their doctor to install an elevator in their home. The elevator costs $30,000, but an appraisal shows it only increased the home's value by $20,000. In this case, the taxpayer can include the difference, $10,000, as a qualified medical expense, subject to the 7.5% AGI floor. If the improvement did not increase the home's value at all, the entire cost would be a potential medical expense. Be aware of non-deductible items, as these are frequent sources of incorrect answers on the exam. Generally, you cannot deduct expenses for the benefit of general health, such as vitamins, a gym membership, or a weight loss program, unless it is prescribed by a physician to treat a specific medical condition. Elective cosmetic surgery is also not deductible. However, if the surgery is necessary to correct a deformity arising from a congenital abnormality, a personal injury resulting from an accident or trauma, or a disfiguring disease, it would be deductible. The key is whether the procedure is for medical necessity or purely cosmetic reasons. Remember, you can never deduct any expense that was reimbursed to you by insurance or your employer. To help you remember the crucial threshold, use this simple phrase, 7.5, to stay alive. It connects the medical nature of the deduction with the 7.5% AGI floor that you must overcome before any deduction is allowed. This mental shortcut will remind you to always perform that critical calculation before determining the final deductible amount on any exam question related to medical expenses.